Let me see something. Hold on. Popped up now? Okay, yes, now we can see it. Okay, perfect. All right. Okay, so the first thing here, let me take a look. I'm also going to be stopping periodically to let people in the group as they join. Okay, there we go. Okay, so RKT presents credit repair. Look at the contact information below as far as my phone number and the email address to contact us at RKT Appraisals. So the first thing I want to go over today was what type of credit scores banks use. So one of the things I want to highlight, banks primarily use two different types of credit scores. They use what's called a Vantage score as well as MyFICO. That's important to know. The reason being a lot of people download MyFICO and they also, use a variety of different credit reporting companies to find out what their credit score. But most banks actually use MyFICO, but some banks still use Vantage scores. It's all kind of a new trend that's happening now, where the bank uses Vantage scores instead of MyFICO. So what you do want to do, you want to find out what your bank is using, or the banks that you're going to choose to use to get a loan. You want to find out what they actually use. So that's something you want to get in the habit of doing. The next thing I want to go over again was the difference between Credit Karma versus MyFICO. They both use a different scoring system. Like I said before, Credit Karma uses Vantage scores, but they definitely use different scoring systems overall. So again, it's very important knowing which one to use. The other thing I kind of want to talk to today was what I piggybacked off the last time we all came in was about credit cards, and if you don't have a credit card. Credit cards are very important. The reason why credit cards are a big driving factor on building up your credit. So essentially, if you don't have a credit card, you actually want to get one. And if you're not eligible for a credit card, you also want to use what's called a secure credit card, which I was talking about before. What a secure credit card does is it's something where if you don't get approved for a normal credit card, you can use a secure credit card. You can apply to one, which you definitely want to be careful what secure credit card company you choose, because they have different rates. And a lot of companies could charge you a lot more money, in terms of fees and interest rates. So you want to be careful who you use. But the good thing about secure credit cards is that the money you put down is your credit limit. And again, it reports to the credit bureaus the same way as if a normal credit card would report to a credit bureau. And one thing I want to go over today that I went over in my videos before as well is if you have student loan debt. Just by a show of hands in the group chat, who has student loan debt? Okay. And that's a big thing that worries a lot of people, student loans. So if you're preparing for a mortgage, it's okay if you have student loan debt. It's actually a good thing having student loan debt. Believe it or not, it helps with your credit mix and what's on your credit. So what banks need to want to look at is see that you have a balance of car loans or credit cards, but they just want to see a mix of different types of credit. So if you have student loans and you want to get a house, what you want to do if you're preparing for a mortgage is that you want to restructure your student loans. What do I mean by that? Ultimately, if the bank is going to allow you to essentially get a loan, they want to see what you can afford. So 3 to 6 months, or as early as possible, you want to go ahead and call your student loan company and restructure your loan and try to get your payments lower. The reason being, the lower your payment is, the more you'd actually get approved for. So essentially, if your current payment is currently $500 a month, and if you can get your student loan payments lowered to $300 more a month, that's just more money the bank will end up approving you for. So that's a big major factor, because that's something everyone faces in terms of student loans. But again, you want to do it as early as possible and ahead of time, of course. And let me open up the floor for any questions so far. If you have any questions, you can unmute yourself. Okay. And no questions so far about that? Okay. couple other things we want to go over in terms of preparing for a home loan. But some do's and don'ts. Banks look at all account activity. So definitely, if you're looking to get a home loan, you definitely want to be careful not do any unnecessary spending. Because again, banks do look at all of your activity. Some don'ts that you don't want to do. You don't want to open or close credit lines. You definitely want to be careful in doing that right before you're about to get a loan. Also, you do want to make a saving plan. You definitely want to budget yourself and come up with a saving plan and strategies. Banks look at that as well. Another don't you don't want to do is you don't want to make major purchases. Banks look at major purchases, especially anything over $500. Of course, you have bills and things like that, and that's fine. But you definitely don't want to make major purchases prior to you getting a home loan. Other thing you want to do as well is you want to maintain your current employment and income. What do I mean by that? You don't want to switch jobs right before you're about to purchase a home. Banks look at consistency and where you work at. So the longer you work at that location, the better. You don't want to switch. If you have control of it, should I say, you don't want to switch jobs a month before you go into getting a home loan. The reason being, the bank is going to see that you're not stable, and they don't know if you passed probation, as well as they don't know how you're doing at your job. So you definitely do not want to switch. It can cause problems for you. And again, it shows fluctuation in income. So that's another reason why you don't want to switch employment prior to if you're looking for a home loan. The other thing I want to say, look over too as well, is you definitely want to create a paper trail. So everything you're doing in terms of spending, you want it to be traceable. The reason being, any activity that's not traceable, it's unverifiable for a bank. And with a bank, they need to be able to verify everything, because any suspicious activity, they're going to have questions about it and dig deeper for you. The other thing you want to keep in mind is that you don't want to make large cash deposits into your bank account other than your paycheck. Again, banks want to see consistent activity, and they want to be able to trace all money and know where all the money is coming from. Okay. And those are some of the things I wanted to talk about. Anybody have any questions so far?
I believe Kasim had a question. I don't know if it's a statement, but like a question.
Oh, I have a question.
Yeah, go ahead.
Oh, regarding your credit score, on my Unifax credit score, I have accounts that are closed. I have some that say closed and some that have zero balance. So should they stay closed on all of them or just zero?
So say that part again. So you have accounts and some of them are closed, or they closed because they're paid out, or?
Yeah, they're all paid out, but on some of them it says closed, like the word closed, and some of them it just has the zero, like a zero. So the zero have to say closed on all of them, or it could be zero and leave it alone.
Well, it's fine if it's closed out because it's paid off.
Yes.
Now, yeah. So if it's just paid off and it's closed out, that's fine. What you don't want to do is that you don't want to close out accounts unnecessarily. So if you had a credit card and you paid it off,
yes,
and you close it out, you don't really want to do that. The only reason why is because it's a loss of credit. It shows a loss of credit history. So essentially, how your credit works, part of how the makeup works is essentially they look at your credit history, how long you've had credit. So when you close that credit card out, you then lose that credit history. So hypothetically speaking, say you had a credit card for 3 years and you close that account out now, it shows that you just lost 3 years of credit history.
Oh, I see. Oh, so I should have left that alone then.
Correct, but it's not the end of the world because you can always get another credit card and things like that. The major time that it affects you, of course, if you're looking to get a loan recently, soon, and then you just close it out, that's when it negatively affects you or impacts you the most at that time, because banks do look at that.
Okay.
But eventually it fades off, and it's something where you can always repair it. But of course, at any time, if you're looking to purchase a home, you don't want to close out any accounts, even if you pay it off. It's
okay.
better to actually keep it open.
Okay. All right. Thank you.
You're welcome. Any other questions?
Kasim had a question. I'm going to read it to you.
Okay.
It says, if you restructure your loans, does that disqualify you for loan forgiveness plans?
If you restructure loans, no, that doesn't disqualify you from loan forgiveness plans. Reason being, it's actually two different things. Restructuring your loan, it may be because one, it can be for a variety of reasons. You can have a change of income, which that's a valid reason to restructure your loan. So no, that doesn't affect it. You know, it could be for different reasons of why you have to change it, whether it's a hardship, whether it's income has changed from losing a job or getting paid less money or getting paid more money. It could be because of dependence. All of those type of things are factored into how much you actually have to pay for your student loans, and so that's why it can change, and that portion wouldn't affect it because it's different. Anyone has any other questions? Okay, no? Okay, so a couple other things I wanted to talk about as well is credit scores itself. So in terms of the credit scores, a lot of people, a lot of people in general think that, you have to have perfect credit to get a home or to get a loan. That's not the case. Typically, if you're trying to get a home, as I brought up in the last presentation, you can start considering to get a home, should I say, at 620. You can get a home loan at a lower credit score. You don't want to. The reason being is because the interest. So what it is that you can get a home loan starting at 580 credit score. Again, you don't want to do that because the interest rates are a lot higher at that point, and the interest rates dictate how much you're going to pay, additionally you're going to pay over the life of the loan. So a perfect example, say you have a 580 credit score and you want to get a house. They may give you a 6% interest rate for the home over 30 years. That's quite a bit of money. And to break it down even simpler, a 500 credit score, 580 credit score, your payment might be $1,700. But if you had a 620 credit score, your payment might drop to $1,400. If you have, a 690 and 700 and above, your payments might drop to $1,300 a month, $1,200 a month. That's how important it is in terms of credit scores and interest itself. The other thing is what you want to start doing if you're trying to build your credit and actually getting a loan, whether it's a credit card or home loan or anything else, you want to practice good habits. What do I mean by good habits? If you have a credit card, you want to keep your utilization down under 30%. What does that really mean? If you have a credit card and you have $1,000 limit, you don't want to use the full $1,000. You only want to use $300. And the thing I always tell people, you don't want to keep more than $300 unnecessary on the card. You really want to keep it at $100 or less. That does wonders for your credit, but it starts to hurt your credit when you use more than 30% of your total balance or credit approved. So if you use anything over $300, even going over 301, just that $1 can negatively affect you on your credit. It's undoable, so if it happens, it happens. But the main thing I always like to tell people is that you only want to use credit cards, honestly, in emergency circumstances that you just can't help. But other than that, you should only be using it for small items just to build your credit. It's only just kind of a prop, to be honest with you, when it comes to credit cards. And let me go ahead and pause. Does anybody have any questions in general about credit card usage and things like that? No? Okay. So does anyone have any questions in general, overall?
Rashidi, you said that before we buy a house, we should dump money into our checking account. What if you with your partners and stuff, we get that money from the partner? We can't prove how we get the money. How we go about that?
So that's an interesting one. So actually, that's a good question, Sarita. So when it comes to the partner, that's something where, to be honest with you, you can. The only thing with the partner is that you have to actually get the people that's involved in the partner some banks will allow you to write letters showing who's involved in their partner and how much money is involved because it creates the paper trail. The only issue with that is that, generally speaking, most people don't like to, admit or, when it comes to writing letters and things like that, they don't want to show that. So that's the part. But to be honest with you, you can actually do it. It's not recommended just because the bank wants to see everything traced, so they want to know who's involved, who threw what amount, and that type of thing. And so if you're in a partner of 10 people and 7 or 8 people cooperate, but that ninth person might have thrown, $1,000 or $1,500, the bank, it may cause a little problem, but anything that's verifiable, they will still use that. But yeah, generally speaking, you definitely, I would still say you can still do partner. It's one of those things where if you choose to go that route, you probably just want to, essentially use that kind of as your cash funds. What do I mean by that? One, instead of paying your bills with your normal account, that partner money, I probably do that instead, and so it balances out, and the money in the account remains the same. So it keeps everything consistent for the most part. The other thing you want to do is the partner is a good idea, and those banks they typically start looking back about 3 months. That's when it's crucial, the last 3 months activity. So if you're doing a partner and you do it about 6 months or more in advance, the better. You probably want to cut it out prior to, but the main thing banks want to see is about 3 months of consistency overall. And in terms of and how it ties into taxes, is that honestly at the end of the year they look at your taxes overall, but that that shouldn't be a big blip in the system or a red flag too much for the most part.
All right, thanks.
You're welcome. Does anyone else have any other questions?
I have one question.
Yeah. All right.
Okay. Which cards are better? Are cards from stores like Macy's are better, or cards from like banks from Chase or TD Bank? Which credit cards are better?
Yeah, so that's a good question, Judy. So it's three different types of cards. So what I will say is the ones from like Macy's and stuff like that, they are good cards because they do report to the credit bureau all the time. So they're good in that sense that they report to the credit bureau the same way credit cards does. The only difference is though with those they typically have higher interest rates with those cards, and plus the only thing with that is it forces you to use that card at that specific place or vendor. So if you have Macy's card, you know that you can only buy something at Macy's. So it's one of those things where, yeah, you may want to catch something on sale, but the reality of the situation is do you really want to continuously use that card all the time? And the reason why I bring that up is that if you have a Macy's card and you only use it once in the blue moon, then it's not actively helping your credit overall just because it's just sitting there. And then eventually, if you don't continue to use that Macy's credit card over a long period of time, typically 6 months or so, at that point it shows on your credit report inactivity. It's still an open line, so it's good on that aspect. So it's still good reporting, but it just doesn't give you the bang for your buck. Things like that are typically good in intermediate situations. So what do I mean by that? Macy's is good to have with a low limit and use it every once in a while. Things like that if you're doing Macy's. But if you're doing like a Raymar Flanagan with cards where you're getting furniture, things like that, those are good because at the end of the day, if you use it, typically it's a 0% interest for a year or so or something like that, and you pay it off within that year. That looks great on your credit. You pay off a high balance. There's no interest for you in most of those programs. The only catch to that is that typically once you go over that time frame, the interest rate typically skyrockets. So that's the bad thing about those type of cards. But again, if you need it for a certain purpose, it's good to have. And then as far as a credit card, why a credit card is the best overall, because you completely control a credit card and you can use it everywhere. So essentially, you can use a credit card to build your credit all day, every day. You can charge something on your credit card every month for something used, whether it's gas at a gas station, whether it's a gallon of milk, doesn't matter. You can use it all the time. It's continuously reporting to the Federal Bureau versus the other cards just for that particular company itself.
Okay, thank you.
You're welcome. Does anybody else have any other questions? Okay, no more questions. Okay, so again, the one good thing about this with RKT Appraisals, what we do is we do credit consultation. So essentially, we go over your credit report, look at everything on your credit, and then we draft up a detailed way of cleaning up your credit on what to do and put an action plan in place. And then we also send dispute letters. So we dispute negative items on your credit report. So if something's not supposed to be there, we send letters out for you to have it removed. So those are some of the things we do. We also create a budget plan for you. So, busy times, we're all busy with family, kids, just work and life in general. And so we actually sit down and we have a system that we use that actually sits down and takes in all consideration of all your bills, everything you have to budget for, to actually set up a plan so you can execute it to be able to save money and accomplish all the goals you have. Because the reality of the situation is you could want to fix your credit, but if you don't actually sit down and see what you can afford, what you can cut back on, you can't really get anywhere. You definitely have to make a plan. The other thing that we also do as well, in terms of credit, we help you with dispute letters. We give you advice on collection items, because sometimes things happen, life happens, things don't get paid, things go into collections. We give you advice on what you should pay, how you should pay it, and how to handle it, which is very important, because we all have had bill collectors call in about certain debts, and sometimes it's not worth paying it at that time. And also, if you do pay it, you want to make sure you're doing the right thing. Make sure that the debt that you're paying, they're going to delete it off your credit. So you want to make the right agreement. So we help you through that whole process, because just because you want to do the right thing and pay a debt off, you want to pay it off the right way. Because to be honest with you, the creditors or the people that has the debt, they don't tell you the right ways to where it's going to help your credit. They just want you to pay it. And the reason I bring that up is because you can have a debt and you can pay it off, and in all reality, your score only goes up 2 points. You're like, hey, I paid off the bill. I did the right thing. But the reality of the situation is that if that creditor had agreed to say, hey, if you pay it off, I'll erase it as if it never happened, your credit would have went up 20, 30 points. But because it's out on your credit and you pay the bill, all it shows to the creditor is that you paid the bill and it remains on your credit report. So the banks, credit cards, everybody still sees it. They see that, hey, you did a good job. You finally paid off what you owed. But we still see it, and we can kind of judge you on it. So those are a couple of things to keep in mind, and those are some of the things with RKT, what we help you with. We help you with credit consultation, like I said, walk you through the process, and we'll get you in a position where you need to. We work on all your goals. We sit down and talk to you and be realistic with you, look at your finances, look at what you can and can't afford, look at your personal life, and really tailor it to your personal needs and goals to come up with an actual game plan to get you to where you need to be at. Does anybody else have any other questions? No? Okay. And Kayleen, did you want to go over some of the other services that we offer outside of credit repairs and solution as well?
Oh, yes, absolutely. So what we do also is another thing that we do is life insurance, right? We help families get properly protected through life insurance. How? Because we're partnered with a lot of different financial firms, right, that we can help our clients find the best solution that best suits them. And then lastly, we help out with retirement planning, right? Also debt solutions. So anybody who has debt, anybody who has medical bills, student loans, credit card debt, clearly we can help them resolve that debt as well. So that's another thing that we do here at RKT Appraisals.
Perfect. Okay. So of course, our email address back on the original slide is going to be estimates@rktappraisals.com. And then that's the phone number there, the 973-420-5028. You can call us at any time. We do actually do free consultations. What I mean by that, we'll sit down and talk with you and go over all of our services, how it all works, and kind of find out a plan for you. Because one thing we like to encourage is a lot of times everything's price driven. Everything costs money and we don't want to waste money. But a lot of times we get discouraged because we don't know how much something costs. We don't want to ask the questions, or we're afraid to ask the questions. So what we try to do at RKT Appraisals, we actually try to have you sit down with us with a free consultation, go over your situation and work out a plan whether you can afford to sign up today or not. And we are affordable, but we sit down and set up a plan for you so you can actually start getting things in motion to get done what you need to get done. And then what I'll do is I'll leave the floor open for any last questions. So I'll leave the floor open for about 2 minutes or so. And if not, we'll go ahead and end the call in about 2 minutes if there's no more questions.
When is your next presentation?
Typically we do our presentations about 2 times a month. Right now, the next presentation is going to be on the 22nd of January, which we're going to go over some more topics based off of everyone's feedback and what they're interested on. And some other things soon to come, to be honest with you, Judy. We'll be going into more the piece of what Kaylene was talking about as far as life insurance, mortgage protection insurance, as well as what ties into our credit repair, where we do debt solution, and we offer life products, and just to piggyback what Katie said, and we'll do seminars on that too as well. As retirement packages, as we have people that want to retire, don't know what to do with their money and how to handle it and balance it out. So we work with retirement packages, life insurance policies from children to adults, there's policies for everyone, mortgage protection insurance. So essentially, if you own a house or you have a condo or duplex, and somewhere to happen to someone, the person that's on the loan, should I say, mortgage protection insurance will cover that home. This way, God forbid, if something happened and you have life insurance, and you have mortgage protection insurance, you won't have to get paid off, and you have the life insurance product as well. So we'll go into more deep things about in terms of that. But yeah.
All right, no problem.
Thank you.
All right, see you.
You're welcome.
See you.
All right. Anybody else have any more questions?
Oh, yes, here. Bye.
Bye.
Okay. Well, definitely want to thank everybody for stopping in today. Definitely appreciate your time. Definitely appreciate your feedback. Definitely check out our Facebook page. We're on Facebook, Instagram, TikTok. Again, if you have any questions at any time, always feel free to reach out, give us a call, give us an email. We're never too busy to stop and help. Again, check out the sites. Go ahead and take a look at our sites. Facebook request us, friend request us, and anybody that needs help with credit, life insurance, mortgage protection insurance, debt solution, any credit service, and any financial services, honestly, definitely go ahead and give us a call, and don't hesitate at all. With that said, everyone definitely have a good night.
Good job. Good night.
Thank you. Appreciate it.
I got in too late though, but that's all right. What you said, Penny? I got on too late because I couldn't figure out how to do the microphone.